Anecdotes for success. Level up with truth, meaning, trade-offs, perspective.
All right, so John, Matt, here we are. We've been talking and talking, and I didn't hit record yet, so now I'm hitting record. John Bloom, it's great to have you. Tell us about yourself. Get the audience up to date with who you are.
All right. First of all, Paul and Matt, thanks for having me. This is my first podcast, so hopefully I bring it the right way. You know, basically, I'm former Wall Street. I was a sales trader. I covered hedge funds, right? I worked in finance, since college, right? Taught you sports, definitely football, definitely basketball. I started to simplify some of the stuff in football. And I was able to get like third and fourth graders to kind of do some stuff we did in high school and college, setting the edge, contain, some of the other stuff. And it really worked. The kids bought in. You kept it simple. You kept the concepts, but you explained it in an easier to understand manner. And when I looked at financial illiteracy, which means you don't understand how money works, I was like, I have to do this with money. I don't want to be an academic. I'm not trying to impress anybody, but like, let's build the skill sets for these kids or these young adults that by the time they graduate high school, they're not going to make the big mistakes. They're going to understand some of the important concepts, and maybe we can speed up their wealth, their wealth accumulation. Right? I didn't really like the solutions out there, so basically, I did some research. I worked it back, and I attacked it like a coach would do it to kind of build people up. Right? And Paul, you've seen the course, so you get it, right?
Hey, John, go ahead, Paul. Go ahead.
No, I was just going to say, so the cover of our podcast this week is the cover for John's course, and I've been blessed to be a contributor for it. And we'll talk about some more big news with that if John wants to drop that later in the podcast. But
yeah, let's go. Sure.
It's a fabulous book, and the book we talk about in this podcast is actually the cover of it. But Matt, go ahead, ask your question.
Yeah, John, what I was going to ask you is, that what you're talking about with the financial literacy or illiteracy, as you put it very perfectly, you when you say you saw it out there, because what your story rings very similar to mine, and just talking to people and going, oh my Lord, these people don't know anything. So I have kind of my story as well, but where were you seeing that? You know what I mean? Were they your friends? Were they your family?
Yeah. No. So like I was doing the research online, and the biggest problem with, so there's financial understanding competency for adults, right? And adults have to worry about retirement. Adults have to worry about taxes. Adults have to invest, right? But you are missing the precursor to getting these people ready for that in their 20s. So most of the time, people just go to school, they learn, that's cool, right? They take their subjects. I was economics in college, totally fine. You start working, and you're like, okay, I guess I need to invest, right? Or you go to college, you make some mistakes, you ring up some credit card debt, and I got to get these credit cards paid off. Like, nobody really was being prepared proactively for life outside of their home. And the other thing that I noticed was, like, we can't count on adults to teach these children or these kids or these young adults, because the majority of the adults don't actually understand it either. So
they don't know either.
This thing that, right, they don't get it either. And it's not their fault. It just has never been taught the right way. Okay, it hasn't been taught from a skill set, and we'll get into that, right? But I'm like, I need to do this so that the parents will trust me, and Paul, to speak directly to their young adults to prepare them, right? So that's why, like, online, you have my whole name, you know where I am, I'm friends with administrators, coaches, teachers, right? Like this year, my fifth grader had this classroom economy, and I was helping the teacher with it. It was fantastic. Paul, we should talk about that. It's a great idea. And it's like, it just wasn't set up the right way. These kids want to hit 3-pointers and they can't make their layups. You know what I mean? Or it's like, hey, you don't understand the blocking, the tackling, the fundamental part of it, right? So like Paul has this financial matrix, and I'll give him credit because I didn't really want savings in there, but I think he's right to do it. It's like, it's a math equation, and that's something else we can talk about. But, because of the digital money, I don't think people really understand how money is created anymore. They're not shoveling driveways like we used to back in the day and making $20, and they're flipping sneakers. Some smart kids are flipping sneakers. That's totally cool. So you have your income piece. You for sure have your spending piece. I think it's investing. Paul was smart to put savings in there, because then we talk about personal savings rate and cash flow. It's just like, I don't think these topics are that hard. I'm comfortable with math, but it just needs to be explained much simpler so they can get some confidence and be like, hey, man, I can do this. Because, Matt, the other thing is, how it is. Like, you can go buy an index. You can go buy an ETF. Like, you don't need somebody, some people want others to manage their money, but in reality, I think most people are actually capable of just managing their own investments now too.
Well, I
right?
think
you could just be,
I think you make a really good point, and the thing that I see so often is people just don't. They're scared of it. They're afraid of it, and like you
they're
said,
not. Yeah, they It's almost like the financial industry has created this level of intimidation that the average person can't do it and can't handle it. And hey, you better give it to us.
I think there's something to that, and I think that what you're getting at is there might be, but I think I'm with you. I'm not a guy who's gonna. I was never gonna wow you in the classroom as a student, but I find the concepts to be relatively simple as long as they're explained appropriately. And I did a lot of reading and research, and then by doing that, I went, this stuff isn't nearly as intimidating as I had thought. Before you know it, I'm on a whole different path in my life financially just by getting involved in it.
Right.
But I think so many people are afraid. I think what you're saying is important for people to hear, because they're not alone if they're scared.
And it actually upsets me, right? I mean, when we look at, so that was part of it, right? So when you look at, it's like, what would I want my children to completely understand before they left my house? Like, what mistakes did I make in high school and college that I don't want to see people make, right? And when we go back to the concept of financial literacy for an adult versus financial literacy for a high school person, nobody ever changed the equation or the skill sets that they really need when they're younger. Of course, retirement is important, but for the younger people, you have to understand how to generate income. You have to have a level of business understanding, which I know, Matt, you get. I mean, you understand net income. Imagine understanding net income by the time you graduate high school. Imagine understanding how to set up a simple business. How powerful is that, right? So that was our first section, actually. Yeah, of course. So our first section is like, let's talk about small business, active income, generating income. Because by the way, that net income from your business, you can replicate that with your personal finances by being positive cash flow. So that's our first module. Paul, what do we got? We got a lemonade stand, we got a baby.
Your module about babysitting, or our module about babysitting, is genius, because as a coach, I always hear kids say, well, I have a job. I don't know if I have time to play sports. Coach John here gives an example about a girl that has a babysitting business, goes and plays high school softball, scales out her business by hiring other people to work her hours for her and taking a cut. That's, I mean,
she subcontracts it, and then and everybody's like, oh my God, I can't believe I can do that. I'm like, yeah, you have the families that want your help. Let's just assume that they trust your judgment. You're charging 20 an hour, you're taking 5, they're making their 15, everybody wins. Right. And we even prove out how many hours it takes to subcontract versus working her alone. So like the genesis of this thing is like, let's give you the simple language. Let's show you the Excel math. Let's get you the concepts, but let's not overload you. So you're picking up the key pieces. If you want to go and explore it further, great. But like, this is the meat of what you need to know. And by the way, it's only 72 pages, by the way. There's no exams, there's no quizzes. Like, read it twice if you want. We don't care, but like, this is what you definitely need to know So you have giving yourself a chance at success earlier. One of my things is with what we're doing, it's like, what is it, Paul? Time, math, and money on your side, right? I mean, that's it, right? I mean, I don't know, something like that, right? I can't remember everything. It's been a long day.
Oh, Matt, I mean, we talk about it all the time with some of my aspiring students with businesses. If you didn't learn to scale out, you wouldn't even be close to where you are today, correct?
No, it's impossible otherwise. It's just impossible. You got to be able to, but you got to be able to scale it out. But to your point, John, is you well, there's what you said earlier. One of the things you said earlier was about the kids being younger. One of the things that I think is important is, retirement. Try to get an 18-year-old or 19-year-old listen to you about retirement.
They could care less about retirement, right?
They don't care, exactly. So it's like, I'm sure, and you guys have a lot more experience with this than I do, but I'm sure it's like, whatever. But man, if you get them on
I didn't care about retirement there. Yeah,
neither did I. Could have cared less. Didn't mean a thing to me. And right. I'm sure if you can get someone that age or a few years older or whatever on that path, and to your point, John, you've got them thinking about what I want to always think about is positive income, positive cash flow.
Absolutely.
That's where the opportunities lie. That's what you've got to understand. And then whether it's how it's going to affect your retirement or the new car you want to buy, the fancy or the cool car. I mean, if you've got positive cash flow, you've got something, in understanding debt, good debt, bad debt.
100% right. So Matt, I'm really proud that we're able to get the last section of personal finance. I'm extremely proud of Paul, what we were able to cover. Positive cash flow, negative cash flow, compounding, FICO. I mean, we get into it and we explain it the same way we do. And then just because we looked at it from a coaching standpoint, the first 3 sections prepare you for that. Because Matt, ultimately, we want to teach them how to think like a CEO and a CFO, right? I mean, but we don't want to put that all on them at this age. No. But ultimately, you want to know your decision making. You want to understand it. So, all right. So the first section is net income. Great. We show business. We show some entrepreneurship. You start to understand the math a little bit. We give that to you. Okay. The second section, which leads into retirement, is the investments and risk, right? Now, I'm not expecting you to be an investor in high school. Fine. If you want to be, that's cool. I'm having crypto conversations with my 13-year-old, and I'm absolutely thrilled that he likes it. It's fun for me. It's nice to have the interest. Okay. So we get into the major asset groups, of obviously it's not just stocks, it's fixed income, it's currency, it's real estate, it's commodities. Okay. So we cover the 5 major asset groups, right? And we even discuss Bitcoin in the currency section because technically it's a non-fiat currency. Okay. So we get all that out there. Then we go a step further. We explain the concept of financial risk, which nobody else is going to try to teach a high school person the concept of financial risk. And Paul, I'm not scared. I don't care. Let's go. Let's try it. Right. Because in life, risk is always a negative, but with financial risk, you're rewarded for it. Right. If you're in the markets long enough.
John, what do you do? What do you guys do in order to teach that? Because that's interesting to me. Because you're right. I don't think that's kind of unusual. So how do you look at?
Well, there's a lot of things that are unusual about how we did this, but
I get that sense, John.
when you work something backwards, and you they need to understand it. All right, so I'll just read a couple sections for you. It's just an understanding of it. So one of the biggest blind spots in financial literacy is a lack of understanding about financial risk. What does risk mean in life? Exposing something or someone to danger or harm is considered a negative, but we all know you need to take risks sometimes to be rewarded. As my life example, I use a new life example. If you are a new skier, you should stick to the green slopes. Trying a double diamond would be very risky or dangerous you can get seriously injured, not worth the risk. So I think most people that are skiers, I mean, I had a buddy in college that we were snowboarding, and, we were crazy college kids. We took him up on a blue, and he blew out his wrist. He wasn't ready. And, people are people. So we get that. And I feel bad for him. We're still a good buddy. But financial risk is the probability of a gain or loss on your financial asset position. You could either be rewarded or punished by the market. Outcomes are not guaranteed. The uncertainty about achieving your investment objective is the risk you take as an investor. Okay. So the biggest difference about investment risk is that the market can also reward you, when in life it is usually considered just a negative. So we're just introducing it.
I see.
And you see the language is pretty simple. And that was the hardest part for me. Like, we've gone through like 10 edits. I got Paul involved in my last edit. And every time I edited, I tried to simplify the language, but still keep the concept. Right. So I'm proud of that. I'm really proud of that. So we do that. We show them kind of like how to track, some of the symbols that are in the equities, fixed income through ETFs, currencies, commodities. We talk about soft commodities, hard commodities, precious commodities, real estate. We talk about residential versus government, residential versus corporate, even introduce government level. So yeah, it's pretty thorough, so for me, it's like, look, to be an investor, you should understand the financial assets. You should understand financial risk. And if you prep them a little bit earlier and get them comfortable, as soon as they start making money, they'll understand they need to be invested in the market, because time in the market is really the key here. We all know that, right?
Yep.
There's always going to be a level of inflation that's going to prop up these assets, right? And I believe you know the real estate really well. I'm not a real estate expert. I do own a house, but that's probably my biggest mistake, is not doing more with real estate. But anyway, so those are the first two sections. The third section you might find interesting, but I had a great conversation with one of my children, and I said, look, man, I gotta teach you guys economics. Like, you might like it, you might not like it. I said, but I have to tell you, like, economics is really important. What do your teachers do when you have to learn something? And he just said, look, you got to teach us it. If it's that important, we need to know it. So we do. The third section is economics that matter, and it's micro and macroeconomics.
Sure.
So I think you'll appreciate this, Matt. You're a businessman. So, obviously we explain micro as, a household, a single person, a business, it's bottom up. Macro is obviously, regional, sovereign, countries, global. Okay. Our first economic concept is supply versus demand. I love that one. I'm sure you do too. You get it. Yeah. I mean, people laugh about economics and technical analysis, but you know what? Price is what you pay. And everybody wants to like pretend that, that's not the case, but supply and demand does affect price in basically every single thing you buy or sell. So to me, that's really the key.
I was just going to say, John, there's a lot of people who are fooling themselves or trying to fool themselves in terms of what's going on out there. And if you have an understanding, and Paul and I talk about this all the time in terms of trade-offs in one of our pillars here. If you have an understanding of economics, it'll be very difficult to fool you in what's really going on out there. And if you have an understanding of what's happening and why it's happening, then you can just make better decisions. That's why I find economics so
of course. And by the way, Matt and Paul knows the key to financial literacy and the key to economics is resource management and making smart decisions with your money. So economics really ties in. Look, like if we were ever going to, like, Paul and I talk economics all the time. When we talk business, I'm like, show me the economics on this thing. Let's talk about it. What are we looking at here? Like, I think economics is great. And I didn't like it when I was younger, by the way. I thought it was boring as can be in college.
I hated it.
Hated it. Now that
it's boring in the high schools. It's boring the way it's taught academically.
And I get it. But now as an adult, I see it everywhere. I mean, I see math and economics everywhere. And I'm sure you do too, Matt, because you're making money. Right.
John, you can't exactly. I was the same way in undergrad and all that. I hated economics. I hated the classes.
Right.
Now, the point I'm in my life, I can't have a conversation or see something out there and not see economics and frankly opportunity everywhere. It's like they're actually connected. You know, they're
100%.
just everywhere.
And 100%. So I don't teach stuff in a boring manner. It's quick. Oh, by the way, we actually talked about currency in the financial assets because, you know, currencies were the first original financial asset. We talk about that. All right. So economics, we do macro. Let's go back to economics. We do the macro. We use Beanie Babies as an example. Matt, you're old enough. You probably remember those guys.
I do.
Probably has some still.
And just to update this thing, Paul, I put out a tweet today about supply and demand with how the shortage of computer chips are driving up the used car market.
Yeah.
And that is pure supply demand, guys. You're seeing it again, right? You're seeing it again. Okay, so then we go to the macro because I think the business cycle is something you should absolutely understand. You know, the expansion, the peak, contraction, TROs. I think you have to understand the natural business cycle. Sure, we're manipulating it. I get it. With all the stimulus, it's been manipulated. You know, we've been manipulating business cycles since late 90s, actually. I don't know if everybody realizes that. But whatever, you still should understand it. How about this one, Matt? Could you imagine being taught real and nominal interest rates in high school?
No.
We do that. We do that in economics. And we actually explain, this is my economics background, how inflation is part of the nominal interest rate. Because we want to explain inflation and deflation because most adults don't have a goddamn clue what it is.
Nope.
So like this course was meant to address all the blind spots that most adults don't get and just introduce it. So as you mature and you grow, you're going to be so far ahead of these other people, right? So we do that. We do nominal interest rates, which is cool. We use the Berger index to show inflation, which is really cool. You know how that works, right? 05 versus 15. We explain deflation, by the way, which I would probably say less than 5% of the general public actually understands. And then we actually show how inflation lowers your real asset returns over time. We have a graph. We explain the whole thing. Okay. So again, you know, we give a light economics review, but we just hit on the major themes. You know, micro, macro, supply, demand, business cycles, inflation, deflation. You know, just what the meat of economics that you have to know. And we build it up. So I like that section. I love all the sections, but economics, I'm proud of how we did it because, you know, again, Paul, everybody, it's kind of boring to a young kid, but, you know, look, it's going to help you make money. Sorry. It's going to help you make a lot of money, right?
Now, you know, and it's kind of like social studies in general. Nobody likes social studies in high school, but then they eat up any type of history movie Hollywood makes because they add some guts to it, right? Same with economics. I mean, Matt knows I use Stephen Levitt and Stephen Dubner all the time, all their Freakonomics books in class and behavioral economics stuff. And when you start explaining stuff with trade-offs and decisions, kids eat it up. And you know, the great thing about John's book is he explains it that simple that people get super interested in it. High school kids are like, well, I understand this. I get this. Hopefully their adult parents read it too.
I love
we are getting some adults that buy in the course. Yeah. I mean, we have some adults buying it too. They just don't feel confident and they want a simpler version of personal finance. And it's like, this is really it.
John, I would argue that most of the adults that I know would benefit from a book such as this. I mean, I know it's hard when you're an adult. You think you're supposed to pretend you know things, and the fact of the matter is, most adults don't know it, and they should know it because they'd make better decisions. They have a better outcome and a better life because of it. So put your pride aside and educate yourself on some of this stuff. This is how I look at it.
Right. But, it's interesting because, Paul and I have this debate all the time. It's like, and granted, Paul's a teacher and I like to think I'm a decent teacher, even though I'm not officially in the school system. It's like, I teach my kids what I want them to understand. I teach them sports the way I played them, just so they understand some old school mentalities to it. And obviously I have the investment background. So we talk about money, we talk about investments, we talk about risk. And I don't blame the people that don't understand it, because they're like, hey, the school's never taught us, which is fine. But at some point in time, you just have to take responsibility for yourself and be like, I need to learn this.
Exactly.
So, and we get that. But what I'm excited about this solution, because we'll talk about it a little bit later, but like, we have an avenue for the schools to pick it up. And I believe it's going to get into the school system. And I think this template or this approach is what will become mainstream nationally within 3 to 5 years, because if you look at it from a skill set standpoint, these are the skills you're going to need, right? Like, if you want to better yourself and change your neighborhood or get out of a bad situation, there's no cheating earning income. There's just no way you can get around it, right? And we actually explain how to make income. So that's the thing. I don't think the age-appropriate financial literacy was ever done correctly. And I want to prove the concept over the next year or two, because it's just a math equation, right? It's your active income minus your spending goes into investments, right? And we need to just get people comfortable with that, right? Okay. How we doing, Paul? Is this boring, or are we ripping it apart?
I'm still awake. I think it's great.
All right. Personal finances, then. I guess we'll get into the PFIN section, which is like, everybody does PFIN, but nobody built up the skill sets along the way, right? So like the fixed income markets, you start to understand the concept of like your credit quality and how you enjoy cheaper financing with the more credit quality you have. And I parallel that into FICO, because it's the same damn thing. It's one thing for corporations and governments, and it's the same damn thing for you. The better your credit worthiness, the better your rate, the whole thing. All right. So, okay. To get the young people's interest, we do start off with compounding, because it's really cool. Compounding is a concept. And like, on Money Twitter, everybody talks about compounding. It's the eighth wonder of the world, yada, yada, yada. You guys all know that, and it's when you're, it's like when you start making money on your interest over time. It keeps building up. I make 20% this year. That 20% goes into the principal, and then I make another 20%. It goes back, and we show that in a light Excel. Okay. But what I don't think most people understand is credit cards are negative compounding. So we wanted to show that how expensive credit card money is right away. And we get into that. We talk about how like 20% against you, how hard that is to get out of. We explain that if I want people to be scared the hell of credit cards in high school. I want them to know how evil it is and how it's a predatory product. And in general, it's not going to get you what you want, especially high school and college. Like, I don't want to see kids make the mistake that I made at Albany, where I took out a credit card and I maxed it out for $3,000 in college. I'd prefer them not to make my mistakes.
Right.
And that's okay. That's fine. I know a lot of people that happened to, and to a certain degree,
I'm sure you spent it on good stuff, right?
I bet I had a lot of fun with it. I couldn't even tell you what it was. So, the key, Matt, is to provide examples, right? So I show that if you spend $9,000 on furniture you can't afford, you're paying $18,000 in interest if you never pay it off. So you're paying 2 times the original amount. Okay. We go right into cash flow, which you understand. Positive cash flow is better than, it's an emergency fund, basically, right? You know that every paycheck you have positive cash flow coming in. As long as you control your spending, you can plow that into savings, investments. You can plow it into a business. You can take more shots. So I love cash flow. I think anybody that teaches personal finance without an emphasis on cash flow is completely full of shit and wasting your time. Paul, you know that.
Amen.
You know, like, what are you doing? How are you not prioritizing cash flow? This is the whole goddamn game right away. This is your fuel to your wealth building car. Like, this is the fuel, man.
I call it the buildup of my army. It's what I've always called it. I remember I was probably 8 years old, John. My father was an entrepreneur, and I'd be, 6, 7, 8 years. I don't know how old I was, young, and I'd hear him saying to me, "Matt, always remember cash flow. It's all about cash flow." And I'm like, "Shut up! I'm trying to play Nintendo or whatever I was doing at the time, Pong probably." But I always look at, like I said, they're my soldiers. Like cash flow, those dollars, those are my soldiers to take those shots, like you said, take those swings, to have those opportunities. It's everything.
It really is everything. So we actually, again, we introduced the concept, we introduced the application, and we give examples. We literally showed the math with Jim and Karen. I couldn't miss the opportunity to make Karen the negative. Karen is cash flow negative. I couldn't resist. Sorry. Because, Matt, I mean, if you're cash flow negative, it's going to a credit card, isn't it?
You're treading water, and it's not going to be good. Yeah.
Right. It's just not going to work, right?
It's not going to work. Expensive, and you better find another income stream.
100%, and you're trapped. Good luck, the whole thing. So we get into that. We completely dissect compounding, positive cash flow, negative cash flow, the benefits of it. Like, I legitimately reiterate 3 to 5 times in the book, Paul, that you don't start investing until you get to positive cash flow and you have an emergency fund. Because the other mistake that a lot of people make, Matt, is that they don't have an emergency fund. They have these investments out, something happens, and I call it ATMing your investments. You have to pull it out like an ATM machine.
Yeah.
And,
John, another thing that I think is important in what you're talking about there that maybe you've thought of, maybe you haven't, but if you get people in the mindset that before they start getting into investing, they need to have positive cash flow, and they have to have an emergency fund. What that does to them is it puts them in a mindset that it changes how they look at money. They don't just spend it all. They don't just go, oh, it comes in and it goes out. They start to make better decisions. Not all of them, but this is where it should go. And this is where it went for me.
Yep.
You are going to love, different decisions. People say to me all the time, because I have a reputation for being a tad frugal in some ways, to put it nicely. And I'm driving a car. My car's 2012 Tahoe with 200,000 miles on it, and I hear this all the time. Matt, why don't you buy a whatever, fill in the blank, whatever fancy car? And I go, because I don't value it anymore. Back 15 years ago, that may have been my dream, but when I started figuring out cash flow and how I was going to build money to invest, all of a sudden those fancy cars, they didn't mean anything to me anymore. What meant something to me was building that army of soldiers to build my businesses, take my shots, do those things. Now I can afford the things that I thought I wanted. Now it turns out I don't want them anymore.
Right. So we started to understand that because we got older. Right? Like, I had all the fun corporate meals. I've eaten all the nice restaurants. Sure. I drove the cars. It was fun, man. It was awesome. But then you realize, like, that's not what life's about. You start to understand opportunity cost, and we explain opportunity cost a little bit differently. So I think you're going to really like how we built it up. So let me get into that. Look, needs versus wants. It has to be explained. It can be explained to middle school. It should be explained to middle school. But you have to reiterate needs versus wants. And I like to extend needs versus wants a little bit into overspending. So the way I look at it is like you're saying, you need a car. That's your need. you want a Lamborghini. That's not practical. That is overspending. And I don't think many other people explain it that way, but I think that makes sense to every person, right? You need a house. Hopefully you have a nice house. You don't need a 20,000 foot house. So that we get into that. So we start with needs versus wants. We explain it. And then, excuse me, but let's talk about spending. Holy crap. High school kids or high school adults, high school young adults, like spending's a major thing that you have to get right at that age. Right. And you have your Venmo and, you maybe have your allowances. Maybe I hope you work a little bit. You kind of have to work nowadays, but we dare get into spending. And like you were saying, Matt, then we slip an economics concept into spending. We talk about opportunity cost right here. We nail opportunity cost. And my example for opportunity cost, which I think you'll like, is we might have changed it, Paul. Let me take a look. Okay, so there's some scarcity to spending money. You can't spend $20 more than once. Once it is spent, it is gone. By choosing opportunity A, you cannot pursue opportunity B. There is a cost to your decision. You are voting with your money on every purchase. Should that money go to a fancier car, or maybe that money should be saved for you? Should I spend that money today, or maybe I'd like to go to that concert in 2 months? Like, people get it when you explain it that way. And I think opportunity cost is used a lot in investing. But to me, the best application of opportunity cost is spending versus investments, and opportunity cost supporting positive cash flow. To me, that's the ultimate win right there. It's like you can understand opportunity cost in a couple different boxes. You've absolutely nailed it. And you said that perfectly in your 2012 Tahoe. I have a 2012 Escalade Tahoe, and I love it. It's our road trip vehicle, and the thing's fantastic. It's great. And by the way, it's one of the best years because that was right before they jammed too many computer chips into the car.
Oh, is that right? I didn't even know. Okay.
And I know that because when I lived in Chicago, I had it was a certified pre-owned, and the guys at the dealership, they told me, like, do not ever get rid of this model. It's one of the best ones, and they took great care of it. I have it in New York now. I mean, by the way, have only 84,000 miles on ours, which is crazy.
Yeah, that is crazy.
It's crazy. We don't drive it as much. We only take it on road trips. It only drives locally, and it's nuts. So it's like, and I'm like, oh my God, I think it just went up $7,000 in the last year.
Oh, probably.
I think it probably did. I mean, I know it's worth 18, but with the computer chip thing, I think it might be worth 25, 27.
Yeah, it's
crazy. And it's in nice shape, but
time.
I love it. It's a great truck. It's awesome. So if you understand opportunity cost, and then we actually get into spending, because to me, if you have a spending problem, you're never going to be able to invest. And spending is something that is really a challenge for the younger adults. So let's give them some guidelines to kind of approach it, right? So, excuse me. The first one you'll know is very simple. You have to pay yourself first. So we're recommending reverse budgets right away. Because to a younger adult, why even have a budget? Just save 20% of whatever comes in and go have some fun with the 80%. Let's build that habit, right? Let's build that habit. It's not a big deal. Like if you make $1,000 a month, put 200 into savings or investings, and then go bananas with that 800. Go crazy. Who cares?
Right.
And by the way, if you actually did that, you would be better off than probably 85% of the country if you did that over your entire life. Maybe 95% of the country. I don't even know, but it's that, because most people are negative net worth.
Correct.
It's insane, right? Okay. Number two.
Go ahead. I'll say
No,
it
Paul,
later.
I was thinking this. Say that, because I think I know what you're going to say, but I think that's important to say.
Well, I ran some numbers today. I hope this is
I don't.
if you put $250 aside a month for 30 years at 9%, you have $500,000.
That's it. That's it.
And
There you
that's
go.
like that's all you're doing. I'm not saying that's enough for retirement or whatever, but you're better off than 80% of society, and go blow the other 800. Like we talk about experiences all the time. And I
Yes.
think
Yeah.
what I've learned, high school seniors don't care about retirement, but when they see their dividends come in, or they see their REITs come in, or they see some flipping come in and some money come in, and they get to start allocating what they want to do with it, and realize since they have other income streams, the cash flow, they still get to do a lot of stuff. I think as they get older, it will shift to a lot more savings because they've started. I didn't mean to go off on a tangent there.
No, and Paul, please, I you know how it is. Like, I like to talk, obviously, and please cut me off, tell me to be quiet. I don't mind. Experiences over things is such an important concept. We drill that in. I'm a big fan of that. I know it was harder to see it during COVID, but Matt, you're frugal. That's great. Frugal does not work for Coach Bloom. I'll tell you that much. I want to have my fun. I work hard. I want to go see my Giants play. I want to go, Guns N' Roses is coming to town. I'd like to go see them. I enjoy live music.
John,
let's
John,
go.
No, I travel constantly. I travel.
He's not frugal.
Right.
Besides his car, he's not frugal.
Right. Good.
I'm with you. I'll drive my Tahoe till it won't drive anymore. But you tell me I can't go. We're heading to Germany here this winter, and I'm heading to Penn State. I'm a big Penn State fan. I'm heading to Penn State, Wisconsin, and in September, and then where am I going? Fort Lauderdale. And this map behind me is just spots all over the country I've been, and then I have my European map and all that all over the world. Experiences are at the top of my list. Absolutely,
100%.
I couldn't agree with you more.
And we want them to know that. Like, go live your life. Go have your fun. Back in the day, it was like all work, no play makes Johnny a dull boy. And it couldn't be more true. I have a saying that personal finance isn't boring. Some people are, right? Like, theoretically, if you run your personal finances efficiently, you should be able to do some really cool shit with your life, right? Like, that's what the objective is. Like, you can be responsible and you can go have some fun. Why the hell wouldn't you? And you shouldn't feel guilty about it, right? So that's number two. Matt, you're in New York, right?
Yep.
Do you remember the old Sims commercials?
Sims.
Maybe they had them up there, but it was definitely down in the city. Sims was like, an educated consumer is their best customer. Like, they had these fancy men. All right, they had these fancy men's suits, and you could buy them. Like, they would buy the discontinued fancy men's suits, and like, I don't even wear suits anymore, but like, there would be like $1,500 suits. You wait 6 months. Sims would have them for $400.
Okay.
I think that was like where I got my first bar mitzvah suit from. Like, I don't even remember, right?
Right.
But so you pay yourself first. You choose experiences over things, but you have to. You need, you want to go buy a used car, or you need new headphones. I don't know. It doesn't really matter. But, everybody rushes, and we're like in this like instant gratification thing. And like, I need it yesterday. I need it as soon as I open my mouth. And my thing is like, don't rush, man. Be educated about it. Do a little research. Make sure you want it. Get comfortable with it before, no buyer's remorse, right?
Yep.
Like, get comfortable before you do it. It can wait. Can wait a day or two. You'll be fine. So that's number three. Number four, again, just to really hammer it down, cash over cards, debit over credit. I want these young adults to really know how dangerous credit cards are. They are really dangerous. The average person cannot handle them. It's a trap. It's a slippery slope. All of a sudden, you need to go on a vacation or something. You slap it on a card. Then you need a meal. Slap it on the card. Next thing you know, you're at half your credit line. It's never, you're not getting a second job. It's just a wealth killer. So I have to hammer that down. And number five, which I had a hard time getting there, but it's like, spend towards your happiness, prioritize your personal values. Like, I'm a tennis player, Paul's a golfer. You know, if you love golf, spend some money in that direction, right? If you're into music, spend some money into your music. Like, I can't tell you what you're into, but like, if it makes you happy, that's where you should be spending your money, right? So I think that's like a really strong guideline. We dare to talk about spending. Nobody wants to talk about spending ever. We talk about retail therapy. We talk about the programming of spending. Got to keep the economy going. Like, we really get into that. So I'm proud of that. You know, people might not appreciate it at a younger age, but like, we have to explain the pros and cons to spending. All right. And if you get your spending under control, you're going to be wealthier that much faster. Right. Then we have to talk about FICO, right? Your credit score. We explain how it's your credit worthiness. I have a chart. I explain, you know, I do an example of a used car with a good credit score and a used car with the worst credit score. We show the math behind it.
Yeah, good.
You know, I literally explain that, like, the lower your credit score, the higher the interest rate, and you're basically wasting money.
Mm-hmm.
Right? You've become their cash flow.
Yeah.
Right? And you're certainly not efficient, by the way. You're absolutely just wasting your money. Now, you need to have credit. You need to manage your credit scores. And one thing that I found is that in some of the communities, it's a little bit harder because the parents might ruin their children's credit scores. And, you know, we're going to dig deeper into that at another time. But cool. Like, I just opened up checking and savings accounts for my 13-year-olds at Chase. And I don't have to pay any fees on it. American Express, you can open up a credit card. You can put your children down as an authorized spender at 14, I believe. Visa is 16. And, you know, I'm fortunate. I have a very nice credit score, you know, into the 800s. And just because they're my children and they spend on my credit card, they're going to basically inherit 80% of my credit score by the time they graduate college, which is really interesting. And it's a really shitty, broken system, by the way. The fact that you can sign up for Experian Boost, pay them $10, and they'll raise your credit score by 10 points. Yeah, seems incredibly fraudulent to me.
Me too.
You know, I don't even know what to say about that. It's just so corrupt, and it is predatory, right? But anyway, you have to manage your FICO, because unless you inherit a couple $1 million, you're going to need credit in your life. Mm-hmm. So we do that one. Really proud of that. We have a glossary of terms for reference. You know, I had these two college kids that went on to play football. They're both going to be sophomores. And I'm like, they looked at the course, you know, probably 3 versions ago. I'm like, what else do I need? They're like, you got to put a glossary in there so we can just check the terms. We can reference them. So we have that.
That's good.
You know, really cool. And we wrap it up with final thoughts. Matt, you'll appreciate this. I explained to the young adults that they are, in fact, an asset as well. Treat yourself like an asset. Grow it, you know, that type of thing.
Absolutely.
So we wrap it up there. I think it gets there. A nice little Winston Churchill quote. I never worry about action, only inaction. Love that one. And that's it, man. You know, like, it's good. It's to the point. It's 72 pages. It's not complicated. It's easy to understand. The easy to understand thing took a lot of time. And I forgot how good it was till Paul kind of kicked me in the butt and we did some edits, because, you know, I don't look at it that often. You know, I've been busy with some other things. But by not looking at it every day, you can, you know, be a little more impartial when you open it up again.
Sure.
But I'm actually really proud now of it. I'm excited. We have some great things coming too. So hopefully that explains it. But, you know, I think the personal finance section is really robust to actually try to get into all that stuff, right? So if you think about the whole course, we've basically problem solved for all the blind spots that most adults don't know. And you're well on your way to understanding that by the time you leave your home. And hopefully you're not going to make major mistakes in college or your early 20s. And that's going to really help your return. I think it's an incredible investment for $30. But I mean, hey, what do I know?
Yeah, no, it is, and you talk about maybe you'll make the major mistakes. Maybe if you do make mistakes, you'll know how to get out of them better, quicker. Those types of things. I look at it and just think how, I was in my 30s before I started getting my act together when it came to some of this stuff, and I tell people all the time, it didn't take that long for me to get moving in a very positive direction, very quickly and climbing quite a bit by just understanding how it worked. And that just came for me from reading and desiring that knowledge. And I can't imagine if I would have known that at 18 where I'd be.
Because that's the thing, like there's this concept of income instability now. And part, everybody will blame the colleges for how expensive they are, but I actually blame the corporation.
Uh-oh.
Well, it's just us, Matt. He'll come back on in a minute. We did so well. Yeah, so, I thought having John on tonight, you'd agree with some of what he's trying to get across. Because I've seen you in my classroom in action.
That's why I got involved, right? When I got in your classroom, that's why I got involved. That's why I started thinking about it more. It's the same thing. I mean, obviously he's taken it to a different step, and I admire the heck out of him for doing it, and I'm glad he's out there, he's selling a book, and, I'd love to be able to, say where people can get it and share it and all those kinds of things, because he's clearly put a tremendous amount of thought into it, tremendous amount of time into it, for the benefit of the reader. That when I say is, I mean, it would be so valuable to someone who took, who read it and took the advice. I haven't read it myself yet. I got to read it. But the concepts he's talking about are the concepts people need to know.
I'll send it to you. Should I let him in?
Yeah, let him.
All right.
But yeah, I think it's like you said.
I'm gonna send you a copy.
Yeah, please do. It's this type of stuff that when I started talking in your classroom and other people, I went, oh my goodness, it wasn't just me. There's so many people who know these types of things. John, you're back, buddy.
I was hesitant to let you back in. I thought you ditched us.
I'm sorry, guys. Can you hear me, Paul?
Yeah, we're good. We're good.
Right, hang on 1 second.
I thought that tiger got him.
Damn it.
John, no problem. You'll get in. We're fine. No big deal.
This is financial literacy, not technical literacy.
we're just talking about how important it is, and I'm shocked that it's not part of a curriculum, the school curriculum more. And is it, Paul, is that just because, yeah, I mean, you got more experience, obviously, than any of us. And is it?
1 second, guys. So
you're fine. Is it because?
Oh, thank God. I'm back.
It just moves slow, Paul, in the academic, in the that type of world, or what do you think it is?
Two things. I'm surprised textbook companies don't jump on this. Okay. But some of it is, I think, at the end of the day, there's not very many people qualified to teach it.
Huh.
I don't know. I mean,
yeah.
You can go to school to be a math teacher, a science teacher, any teacher, but if you're a certified financial analyst, why would you want to go teach in school? Maybe they should have a free ticket to go teach in schools.
Yeah, good. No, that's a good point. Maybe it's not lucrative enough, or I don't know. Maybe that's not the answer at all. I'm just curious because it just seems like such a natural thing that we need and would be so beneficial.
Well, that's part of the reason I went back and got all my securities licensing, and I do the Financial Fridays, and I'm so empowered. And kids want it. Kids eat this up when it's presented the right way. In John's book that I helped contribute a little bit with them, really shows kids how to do it. We filled in for you, man.
I'm sorry, guys. Paul, I get disconnected sometimes. Somebody calls in and I fumbled.
That's okay. Right. So I think we want to break the news where people can find this book, right?
Yeah, where are they going to get your book, John?
Yeah, so thankfully, Coach Rich is technologically savvy. So we're going to be on Amazon. Amazon's publishing the book for us. We'll have it up and ready within 2 weeks. That's really cool. And we're going to be on the SEO probably within 2 to 3 weeks. So between Google and Amazon, you could definitely find us. And one thing that's pretty cool, Matt, like going into the school year with COVID and everything, I'm not quite sure that a lot of the schools are ready to teach financial literacy. I'm not quite sure that was their priority heading into this school year. So it's just really cool that we have a solution that can help and can be used to teach it. So we got some people in New York that want it, and we're going to be probably expanding it out nationally. And I have a pretty good network of friends and coaches across the country, so we're going to be getting it to them. But it should be fun, and hopefully this is the model on how to get them prepared properly and make them ready, for real wealth building, right? I mean, there's some people that won't benefit from this, but it's not about. I mean, the people that are clearly doing personal finance for adults, they might not benefit as much because these people that take this course will be ready earlier. But I think there's a lot of other benefits. The AUM should go up for a lot of these financial services companies. Robinhood's AUM should go up. So I mean, I think we're looking at building a generation of earlier investors, because before I got cut off, we were talking about income instability. And, you're unique, Matt. You figured out a way to kind of build some businesses and make some money. And I know you're quite the entrepreneur, but the majority of the public is going to become millionaires or rich or wealthy through investing. And they're going to need 30 or 40 years now. They're not going to get there in 20,
Yep.
And that's this is really important stuff right now.
That is the majority of people. There's no question about it.
Yeah. I mean, yeah. I'm really fortunate that I have kind of like a background like you. Like I'm comfortable like building stuff up from nothing, and like I don't mind it. I find it exciting. And,
I love it.
But I don't think a lot of people look at the world that way.
Nope.
And these I think the digital money is a challenge, right? I mean, back in the day you had to balance your cash book, right? So I mean, the whole genesis of this course is cash management before investment management, right?
Yep.
And we're really focusing on the blocking and the tackling and the foundation, right? So you can get your positive cash flow. You can go kick some ass,
Yeah.
You go do some cooler things, right? And not waste your money and be inefficient. And, they get it, right? I mean, I think for the younger people, Paul, you'll know it. These subscriptions are becoming quite a challenge, right? But whatever, we'll figure it all out. But it's been fun. It's really enjoyable talking to you guys about all this stuff,
I think it's great. We're going to have you on a year from now to see what happens.
Okay. Yeah. I mean,
maybe before. I know I'll talk to you before that.
You know what? I disagree. No, obviously we got to wrap up now, but no, we need to have on that I'm very curious about, John, that you seem to know a lot about from my conversations with Paul that I do not, and I need to know more of is cryptocurrency. I think we should have in a whether it's a month or two, at some point, you should come back on so we can talk about that, because I need to know more, and I'm sure there's tons of people who do. So
yeah. So interestingly enough, from an opportunity standpoint, from investing, I am of the opinion that over the next 5 years, crypto will easily outperform basically all the other asset classes, especially the stocks. So I'm kind of proud that we're introducing all the other asset classes beyond stocks. And I talk to a lot of young adults. They couldn't care less if it's a stock or if it's a coin or if it's crypto. But, crypto is really cool because it's like a brand new emerging asset class. It's in the engineering stages. I could simplify it for you really quick, Matt. It's an investing opportunity like 90s internet. It's going to be whole new networks out there. It's just going to be a different way. And then instead of having like Facebook and Google own all your pictures, the blockchain is going to give you full rights to your pictures. They're going to spread that picture out across the blockchain. And there's a lot of really cool technology beyond currency coming through crypto. So I love it. I'm fortunate. I have a really nice investment group that shares me like their best ideas, and they're like 10 years ahead of anything I know. But you have Bitcoin, you have Ethereum, you have some other, Ethereum type coins that are really good. You have some payment systems, and then you have a lot of crap. A lot of crap.
Just like when the internet.
But all that crap gives you a much better opportunity if you get them right now. So it's in the engineering phase. You kind of want to be a geek about it, but I believe that's the next area of generational wealth, without a doubt. And I think what took stocks 100 years, crypto can do in 5, because there's no physicality to it whatsoever. It's physical. It's not physical technology like Radio Shack. It's purely digital. It's coding, and not to mention the economics behind it. Basically the global population grew too fast for the old financial system and all the social benefits that we have to guarantee. So it's just all coming to a head here. And crypto rallied a lot in the last 3 days. And there was some news out of the U.S. government that they have to really look at some things, or the currency's at the risk of defaulting. We have 295 trillion of outstanding global debt in the G7. So it's crazy. So again, economics actually makes you money. So it's pretty interesting stuff. But thanks, guys. I hope we had a good time. I hope we made some of the stuff interesting. Some of the stuff interesting, because it's not really boring, but it just needs to be explained the right way.
Agreed.
John, it was great.
Awesome.
The cover of the podcast is going to be Building Financial Competency. And next time you're coming on with the alias of Crypto John.
All right, fine. I mean, there's other people too, by the way. I'm not I couldn't write a course like this on crypto. Like this course was like
right.
all my it's like this course, the financial literacy course was like 30 years of background, Wall Street economics, and like the coaching perspective.
Yeah, but you do such a good job with
crypto.
it.
I'm not even there yet. Take me probably.
Or John, we could just talk about Guns N' Roses. I'm a big fan too.
Oh, I love Guns N' Roses. I have a kid who can sing. He did a cover of November Rain at the school choir in 5th grade, and the audience was just going nuts.
I love it.
Yeah, it was awesome. It was crazy. So,
great.
Matt, really great to talk to you, man. Paul
too.
speaks so highly of you. I can see why.
Yeah,
and,
likewise.
Coach Rich, you're the man.
All right, we'll see.
Now, are you guys gonna edit? You guys are gonna edit this a little bit, or are you just gonna let it rip?
We don't
let
edit.
it rip. That's our MO from day one.
We don't edit.
All right, cool.
Everybody, we got John Bloom, aka the People's Champ, for financial literacy.
Real quick, and if you want to follow me on Twitter, it's Bloom Life Skills, and I try to, teach the course a little bit and make personal finance not boring. That's kind of my, how I try to do it.
We will add it right.
Thank you, guys.
Add it right in the description. See you, John.
Thanks, John. Thank you.
All right. God bless.